I'm interested not just the fact that you said bubble, but the broadest bubble possibly ever. Talk us through that view.
So, Wilf, I think that we all know that the Fed's liquidity has been trapped in the financial markets and can't make its way into the real economy, right? The Fed doesn't want to support financial assets. The Fed wants its liquidity to occur in capital spending and manufacturing and things like that, a broader base of the economy. That's not happening. And so we know that there's a series of bubbles that are forming, whether it's housing, which you talked about earlier, whether it's Bitcoin, whether it's innovation, disruption, all these different things. There's a broad range of bubbles that are forming because the Fed's policies can't make it into the real economy.
Are U.S. equities one of those bubbles?
So I don't think, well, I think we have to separate out the market, if you will, from the seesaw that's going on in the market that Mike just referred to, right? I think the market itself is the fulcrum of that seesaw, and what you're getting on one side is you've got these very speculative bubble-like assets, and on the other side you have everything else around the world. And I think that's the way to think about it. But the odds of the market collapsing, which would be the big drama that everybody likes to talk about, that's probably very low given the amount of liquidity that we have. So I would argue it's more important to figure out which side of that seesaw you want to be on as opposed to worrying about the market.
But we've seen so many of these hot areas of the market, Rich, already fall and have sharp corrections. SPACs, I'm thinking of. Josh Brown looked at the SPAC index yesterday on the show. It's way off of its highs that we saw last year. Mm-hmm. We've seen the air come out of a lot of these frothy parts already, and yet the market figures out how to churn higher. Doesn't that go against the whole bubble will eventually burst kind of idea?
Well, Sarah, I think that gets a little bit to what I was saying before. There's still a lot of liquidity out there, and liquidity is looking for a home. We should all hope that that home ends up in the real economy, but with the yield curve as flat as it is, there's no incentive for the banking system to lend, and therefore it's stuck in the financial markets. So what you're seeing, yes, maybe SPACs fall out of bed, right? But then something else starts popping up, right? You were talking before about the meme stocks. I mean, how could this not be a bubble when we're seeing things like the meme stocks go up, 10, 20, 30% in a day? I mean, that's a pretty strange environment.